Yo, what up everyone? In this video, I want to review and recap two different trades that I took along with some market context and some trades that we took in my Discord community along with some very good lessons so far based off the charts and psychology that we can implement and improve our trades for the future. Before we get into it though, I'm going to link my Instagram in the description below at Investitrade. I recommend following this. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link to this is in the description below. You're seriously missing out if you're not following it. But now, let's get right into this recap. For everyone that's seen the live stream that I did on Sunday, basically going over what I was watching out for this week, you all know my main focus was going to be on the S&P 500. I did the live stream on my YouTube. And I've been saying that I've been bracing for this volatility and I'm tweaking or bending my rules a little bit as we have been seeing some bearish action in the market, making lower lows, also making lower highs. Now, the market also has been failing to rally, and every rally we've been seeing has been getting shut down at supply or it's forming new supply, which is a bearish sign in itself. So now going to an intraday picture, let me make this a little smaller. What we were watching out for was this $4,500 mark and the 44.96 supply zone. So let me pull up the pre-market plan. I post these every single day in the Discord of the setups I'm watching, levels I'm looking out for, supply demand zones, etc. So two areas of interest were on watch on Monday's action. Monday, December 6th. I was watching the 4,520 and 4,500 demand zone. That was going to be my line in the sand. If I was below these levels, I would start turning to bearish. So one thing I have to say is when everybody is bearish on something, it's maybe a good reason for you to figure out where those traders could be in max pain. On Friday, going into the close, everybody else was bearish. But when I did my research, I did my charting overnight and throughout the weekend, I could not be a bear below the $4,500 mark. Let me maximize this so you could see a little better. I could not be a bear below 4,500 just because this was a very key demand zone that we actually bounced at on Friday. Ignore these boxes, all the boxes. It's going to make sense in a second. So I was bullish above it while everybody else was bearish. Now, on top of this, we had a very key supply zone at 45.71 and 45.80. If a rally fails here, similar to overnight and similar to what we saw all last week, I am open to playing a reversal here. However, if we do not find sellers at this area, different from last week's action, and buyers find value or create demand inside, I am open to playing calls into the 46.18 supply zone, which represents this pink box up here. Okay, so now that we have our levels of interest, let's just act like the market was about to open up, and these are the imbalances. So obviously we bounced that demand before the market opened. We had demand lower and we had supply above that we rejected. All last week, if I were to pull up this blank chart here, every single time we rallied, we would fail at supply. So when the market shows bullish shines, as it did on Friday, now you want the action to be different. This is where market context comes into play. You cannot treat every level, every zone, every market, every day the same. You have to put the pieces of the puzzle together, come up with your story, come up with the market story, and when they align and you get your confirmation / entry signals, that's when you're going to have a very good trade on your hands. So now I just want to go to a 1 minute chart, show you where I entered these SPY calls. So what I liked here was the market opened up and immediately sold off. Now, at this time in pre-market, we opened up and bounced at demand. For me to be bullish, why I wanted $4,500 to bounce was I wanted a higher low to be put in the market. I said this in the webinar. It was very, very key for me to be bullish in such a weak market. I don't like being bullish in a weak market, and I don't like being bearish in a strong market. We saw this the last 2 months, 3 months with the very strong uptrend that we've been seeing in the market. So I liked this dip, and immediately when the market dipped up, we immediately shot back up, showing buyers were pretty strong, showing interest in the market. In fact, on the time and sales, we saw some very heavy buying coming through at the 45 to 50 area, very large size, and obviously we got the response from the market as we started moving up. So now what I liked here, pull this up here, was we were consolidating above VWAP. We started moving back down, and I liked us to get long, or I wanted to get long above this little resistance point here, speculating that demand was going to form, speculating that those buyers were strong enough, and speculating that we are going to, from the pre-market plan, find value or create demand inside of this 45.71 and 45.80 supply zone. I'm open to playing calls targeting the 46.18 supply. Again, this is just putting all of the pieces together. So I got long on this bounce. A mistake or something that I did, actually it wasn't a mistake. What I did right, actually, according to the webinar, I said in these volatile conditions, and actually a lot of members messaged me this day and said how well it worked out for them. I've been trading smaller size to brace for the volatility. Smaller size does not equate to smaller profits in this market. Smaller size lets you respect your risk, brace for the volatility, and if the market does move in your favor, it's going to be a very big profit even if you are trading smaller size because of the current conditions. So I got long at 9.59 on the SPY, 4.56 calls at $2.20. My stop loss was going to be if we tested this 4550 area where we found those buyers earlier. If they did not show up, that would have been the area that I would have stopped out at. So we did pull back, and how I view this, I did a recap video for members in the Discord yesterday, this was just a stop hunt. It was to shake out weak longs. They're on the other side buying up the market. We held VWAP. A lot of longs stopped out on this pullback down. Keep in mind, this is volatile conditions. This is a 14-point drop right here in a 5-minute period. 2 months ago, we weren't even getting 14-point days. So in perspective and a ratio-wise, this is a very large drop compared to what we have been seeing. Market then reverses. Now I'm in this trade. I was confident over here where I entered. I'll mark it out so you all could visually see it. I was confident here where I entered. Stop never triggered. But I got a lot more confidence when I started to see this rally. Some nice buying volume coming through. And we were just slicing through this supply like it was not there. Now why I was confident about that was because last week, like I mentioned, let me maximize this. Every single rally we saw got shut down by supply. Every single rally either formed new supply or it got shut down by supply. So when the market gives us a different response and we start moving up past supply without showing any signs of selling, that's a bullish sign. And now the switch kind of flipped in the market. So we got a strong push up. And my final target with this was this 4580 area from the pre-market plan. Actually, no, my final target was 4618. But when we got to this 4580 target, I scaled out 50% of my position here just because of the context, just because I am longing in a weak market, and because I'm up, 15 points on this position. I think I made 80 cents on these contracts. I posted my entries and exits in the Discord if you want to go back and see it. And then we started consolidating here. Now, this is another key point. This is different from what we normally have been seeing. We've been seeing supply reject immediately. When the market starts hanging out here, this is telling me sellers really aren't present or buyers are accumulating for another leg higher. We could speculate that demand is going to form. So this consolidation inside of supply for me right now is not a sign for me to get short. In fact, if I am long, I'm either staying in my position or I might look to open up another position if volume is strong enough. So I scaled out another 25% when we did put in a lower high just to protect myself again. I'm in Monday's expiration. I'm trading same day. A pullback would have destroyed me. In fact, this pullback right here was at the same price that I got in at over down here, which goes to show you how volatility and time will decay your contracts if you aren't smart when trading. When I'm trading same day, I like scalping. I like getting in and out pretty fast. But I saw some nice buying convincing signs. We consolidated all afternoon inside of supply, a very bullish sign in itself. You could actually remove those supply zones. We wedged, and when we broke out of the wedge, this thing had a very, very strong rally, and it missed our final supply target by 7 or so points. The contracts from a $2.20 entry went to a high of about $4 and change. I didn't sell at the high. I wanted to get my final target at 46.18 supply. But as soon as we started moving down and the chances looked less likely, especially with an hour left into the market open, I just sold at $3. So still very, very nice gain on this trade. So a couple key points here. Understand the context. Just because we have demand, just because we have supply, doesn't mean you need to get long or short. Use price and volume to analyze the charts. Understand market context. Enter a position where it makes sense, not only for your confirmation, but also your risk to reward. I could have the best confirmation signal, but if it doesn't make sense risk to reward wise, I'm simply not entering the trade because I cannot afford to lose on that position. That's why a lot of traders, including myself when I first started, would take big hits at the start because they would get in a trade where the risk to reward did not make sense and it wasn't in their favor. Now we had Nasdaq. I did not take this trade because I was solely focusing on the S&P. I know a bunch of members took this and made very nice gains off of it. So this was the same context on the S&P. We had very, very key demand at 1553 and 15543. This is the same scenario. I wanted a higher low to be put in at demand zone, which we did perfectly. That would have shown signs of buying on a larger time frame. If buyers are successful, we're going to go test the 15891, 15950 supply, which will be a good target. The only roadblock is going to be this pink box up here at 15755 supply. If we are successful to find buyers here, create demand here, or slice through it with no signs of selling, I am open to playing calls as long as the risk to reward makes sense, targeting the supply above. So just to go back and analyze this chart, we did bounce off of demand. We came back, pulled back into it. Not only yesterday to today, we put in a higher low, but also now intraday, we're putting in a higher low, especially at demand. Another very strong signs of buying. We hit the supply zone. That could have been a good target for anybody that did get long at demand. Now at this point, we're consolidating, and now we're going to test that supply again for the third time. This time, volume starts increasing. We show no signs of selling. This could have been an area for you to get long, targeting a quick 100-point rally to the upside, 120-point rally to the upside. And when you're trading QQQ on Monday, these probably went up 80 to 100-something% in a quick little period because solely from that, signs of buying, no signs of selling, we hit the target perfectly and closed right at it end of day. So nice couple opportunities on this. There's opportunities all the time. It's just following your style, following your edge, respecting your risk, stopping out if you're wrong, and taking profits where you have to if you are right. Now on Tuesday's action, December 7th, there was similar but different action. Let's just go over the pre-market plan. Our first area of interest was this 4657 supply zone, as you can see from this pink box here. If we do the same action that we saw yesterday, where buyers find value, we create demand inside of it, or if we slice through it, I am open to playing calls to see what's out there at 4680 and then the 4703 key supply zone. If we cannot do this in the first hour of the market open, we are going to pull back into demand and see what's out there for that. Now, here's the problem that I see with a lot of traders, including myself sometimes. This is where trading becomes so emotional. So, a lot of people have biases in the market. They think just because overnight we're gapping up, 60, 70 points, that we have to be bearish the next day. Oh, the market doesn't make any sense. We got the new variant of COVID coming through. I think the market's going to come down, right? These are all thinking thoughts that people put in their head, and this is not the right way to trade. Instead, you have to trade the chart and trade what the market's telling you. I can guarantee you, I was on voice chat today in the Discord. I've been using it more often, a voice chat feature. I I was telling everybody, I could guarantee you 90% of the losses you take have to do with your emotions and what you think is going to happen in the market. That's why we lose a lot, because we think something's going to happen. So just because we're gapping up overnight doesn't mean we're going to sell off when the market opens up. The market will do whatever it wants to do. What you have to do as a trader is leave your emotions out of it, plot your levels of interest, and trade when you see your edge present. That is the only thing that we have control of. Nothing else we have control of in the market. The market will control us. That's not what we have to do. So we wanted to see the reaction at supply. This is similar action to what we saw yesterday, but there really wasn't clean volume. Not the best. So we came into this 4657 supply zone. I said if we slice through it, just like we saw yesterday, we're going to rally into the supply zones above. The only problem and the only reason why I did not enter SPY calls on this was because the best entry would have been right here, or even right here when we dipped, or right here. And I wanted a little more development in the market. I wanted to see us react at the supply zone. And by the time we tested it and came up, for me to enter up here, just like what I said 2 minutes ago, for me to enter up right up here, it's not really going to make sense risk to reward wise. My stop would probably have to be below the low, or my stop by the time I wanted to enter would have to be 20 points lower, 18 points lower. And for my target to only be, 20 points away, I really wasn't feeling this trade. Now, again, that's a feeling, because if I did enter up here and at the point that I thought it was chasing, it would have been a good buy, because this did work out according to plan. I know some members made a killing on this trade, and it's very good to see, especially when someone like myself plans it out perfectly, but just didn't get a proper confirmation signal to enter this position. And all afternoon, after the first hour and a half of the market opened up, we got something called FOMO hours, which is what I consider when the market's basically dead and you're going to start forcing stuff based off of your emotions. This is the area you do not want to trade at all. It's best to shut down and walk away. But the best trades could have been in the morning, breaking above supply inside of it, creating new demand out of it, targeting the supply above. That could have been a nice setup. Now we have Nasdaq. This is a trade that I took today. I wish I took SPY instead. This was a small 20-cent gainer. It was nothing crazy at all, but very simple analysis, kind of coinciding with everything that we're talking about in this video. I said if we're successful to rally and test the 16243 supply zone in the first hour, we could see price rally into the key supply zone at 16329, and we also had supply above it. So we had demand below. Same thing, very large gap up. Not really even close to demand. We had the supply above that I wanted to gauge the reaction from last Wednesday's end of day sell-off. This was the area we blew right past that. And then I said if we could trade the 16243 supply zone in the first hour, which what we did, there's nothing stopping the market from rallying another 100 points into the supply zone above. So I saw the consolidation here. Again, no reason to short such strength with such strong context in a medium-term bearish lower low, lower high market. Now we're breaking out of that lower low, lower high pattern, and we're starting to see some bullish action. So really no reason on the first test to be a seller at supply. So then we started moving up. I grabbed QQQ calls when we broke the high, stopped below this low, and I did not like how we were consolidating here and failing at 1630, and I got out my full position when I can. Quick trade, simple analysis. It could have, backfired on me. I'm happy I made profit on it. If I obeyed my stop, I could have got the supply zone target, but I just was not feeling the lower volatile conditions, especially with how I was positioned in this trade. So a lesson with this is respect your stop loss. Don't sell prematurely. And if you're not feeling it totally 100%, don't take the trade. I made money off of it, but I could have made a lot more if I just stuck to the guns and held that supply. And going into the close, the market's going to close in 15 minutes here. We're stalling at supply, really not selling off. So let's see what happens going into tomorrow. So on that note, I went over basically the S&P and the Nasdaq from the past 2 days to start the week. Very good start to the week. Very, very good. I'm very happy with the analysis, the trades that I have taken, and just seeing price and volume being superior to everything. If you take one thing out of this video, learn to read market context, understand price and volume, and when you enter a position, make sure you're entering based off of your edge. And if you are wrong, make sure you are disciplined enough to follow and respect your stop loss. In these volatile conditions, you do not need to trade large size. Trade smaller size and widen your stop losses to brace for the volatility. I guarantee you, if you size up and the market doesn't move in your favor right away, you are going to stop out for a very big loss. If you play defensive in this market, your defense is going to win you championships, and it's going to win you a lot of championships and make you a lot of money. So I'm going to end the video on that note. If you enjoyed this, if I provide value to your trading, I would appreciate it if you could just drop a like, comment any questions you have. Be sure to follow me on Instagram. And if you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. I will be adding a full tape reading section by the end of the year to the A to Z course. And I promise members I will hop on voice chat more often this week. So on that note, I'm ending it. Peace out.